So if you're new to the channel, please like, comment, subscribe. So the first thing I want us to understand is that the market has to move off of liquidity. Everything has to move off of liquidity, right? So this pattern I'm showing you right now is an inverse head and shoulders pattern, right? So the bulls like to grab the liquidity off of the right shoulder to push up, right? So what the bulls like to do is they like to put their stop losses below the right shoulder, because if the bulls believe in this structure, then they know that this right shoulder cannot be invalidated. And if it was to be invalidated and the right shoulder was to break, the bulls would be forced to sell, as we could see happen down here, right? So the thing is, I want us to understand is this structure was valid for the bulls all the way until it broke right here, right? And the key thing that helps us to identify when we get breaks is our buying channel. So the bulls were pushing up in this orange buying channel. As you can see, they were over here. The bulls were trying to push up in that buying channel. It got broke out of right here. We can see the channel got broken out of. Therefore, we identified that early before the sale started even happening, right? But we needed confirmation on the breakout of the right shoulder that the bulls were trying to push up in, right? So although you have this structure for the bulls, the bears were also looking at a structure here as well. So the bears were looking at a head and shoulders pattern, while the bulls were looking at a inverse head and shoulders pattern. The bears wanted to head up here at their resistance, and they wanted to grab this left shoulder liquidity over here. Just think of liquidity as a pool of buyers and sellers, a place where orders are resting and waiting to be filled. And that's where the money is sitting in the market. So when price moves to a certain level, it's usually not moving there randomly. It's usually drawn towards those orders. And once the market reaches that pool of liquidity, it can use those orders to fuel the next move, whichever way it wants to. And that's why we don't chase, right? We identify where the liquidity is resting. We wait for the market to collect it. And then we wait for the structure to show out for us. As we can see right here, once this buying channel was broke, what we're doing is we are trapping liquidity to the upside. So you have buyers who are buying in, saying, oh, the market's gonna go up, the market's gonna go up, it's got to go up, it's been going up, right? But the bears are looking like, yeah, we need people to think that it's gonna go up so we can grab this liquidity to the downside. And this right shoulder grab forced the bulls to sell, because like I mentioned earlier, if you're going long, you want to put your stop loss below that structure. If you believe in that structure, right, you want to put your stop loss below that right shoulder break if you're a bull, right? And you can see this one candle right here killed or invalidated the structure for the bulls, and it provided enough liquidity for the bears to sell down in our magenta algorithm. And we know that the magenta algorithm is a selling algorithm controlled by the bulls, right? So now when we look at this on a larger time frame, we can see everything that happened over here is now liquidity for the bulls if they want to go up, because you have sellers over here who are still in and you have buyers who are still in. So you have sufficient liquidity over here for the market to push up. But as the market came down over here, it forced a lot of people who were trying to make the market go up lose right here, making people believe that the market was going to go down. But all the market did was come back to a support level, right? And this can be identified as a head, right? So we know that this is a head, and everything over here is our left shoulder. So if the bulls want to grab liquidity, they will have to do it on the right shoulder breakout, right? Are y'all with me? Are y'all with me? Because we know what we're doing is we're selling down in our magenta algorithm and our pink algorithm that is controlled by the bulls to push us down to a stronger support level. Support right here at the head. And then giving us a right shoulder breakout where if you're a bull, you can set your stops below that right shoulder right there. And then you can target whatever level you want to target, right? As long as you protect and you leave runners. But for us, what we want to see is we want to see our breakout and our strongest buying channels. And this is what I always talk about is our green buying channels. That's where we want to see our breakout in, right? Because if we know we're in our strongest buying, then that's a high probability setup. And the previous day, that ended up showing itself over here on a smaller time frame, which the next morning we got this gap up, and over here we got this strong move on the push, right? But understanding that this is the left shoulder, this is the head, and this is the right shoulder breakout is key. So this right here is an inverse head and shoulders pattern, right? Now, if I go to today's liquidity setup, the reason I was talking about us breaking below 775 is if you can look right here, right? This was the last level of support, right? This is the last time we pushed up, boom, we came to 775. So I knew if we was to break below 775, this is where the bull stops are lying right here at 775. So if we break below this level, the bulls will be forced to sell, as we can see over here, right? Let me go to the 30. Right, so 775 was previous resistance, right? So we see 775 right there is resistance. We push down, right? 775 resistance. We push down. 75 resistance, pushing us down, right? On this candle, we can see something changed right here, right? But we can see right here this resistance turn to support, right? So now 775 turned to support, and the bulls were trying to push off of it, right? But you can see once we broke it, that support was therefore turned back into resistance, right? And that's how on the smaller time frame, going back down to my 1 minute, this morning was a waste of time. All of this noise was a waste of time to me. That's why I said 775, right? Once we knew that this structure, this head and shoulders pattern was starting to play out, then we can know 775 can be targeted, right? But when we identified this 775 target early at like 9:50 this morning, I sent it in the community. All right, like I was talking about earlier, for there to be a winner, there always needs to be a what? A loser, right? So as we were pushing up today, we were pushing up in this buying channel, right? Like I talked about earlier, we want to trap people who think that we're going to go up. And I talked about if we did want to go up, we needed to get the liquidity grab at this green algorithm, right? But I'm not going to talk about that. And I ended up sending this structure to the downside in the community because I said if green wants to turn resistance, it can as well. Once we see we got a breakout our buying channel and we hit 775, that's when we want to start paying attention. That's when we want to come up to the charts, we get alerted and we say, okay, what's going on? Let's pay attention, right? So once we start paying attention, we can see this structure that started to play out is when the bulls started to buy up again, right? They bought up in this orange buying channel again. But once we identified we can get ahead right here, we got this left shoulder liquidity that built over there, and this was the right shoulder grab. This was the trade right here. And then once that structure played out, 775 was broken, we activated our orange selling channel to the downside, right? But I want y'all to understand, if you're not taking a trade based off structure, you are not trading correctly, right? You have to understand, institutions have to trade off of structure. They have to trade off of head and shoulders patterns, and they have to trade off of inverse head and shoulders patterns, and they have to trade off of cupping handles and inverse cupping handles. So I need us to get an understanding that liquidity is everything, right? Structure is everything. And once we understand that the structures can guide us in our trades and guide us for our stop losses and guide us when and when to get out and when to reverse in position, this is going to change your trading, man. And if this is something that you're really interested in doing, something you really want to learn, this is the algorithms. These are how the algorithms guide us and show us what the market is doing, right? So come tap in with me. Keep on learning. Keep on studying if you're already in the community. And I just appreciate you guys for tapping in with me daily and putting in the work and putting in the effort to learn this, man. If you have any questions, if anything flew over your head and you just can't get a grasp on it, man, just hit me up, shoot me a message or whatever, and I'll get right to it. But peace, y'all have a blessed night.